Asian stocks are staging a rebound after a sell-off in risk assets led by cryptocurrencies, with nearly $1 billion in leveraged positions wiped out. What does this reveal about global appetite for risk? We'll dive into that ahead. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Global bonds are rattled after BOJ Governor Ueda's hint of a December hike sparked a sell-off. Markets are now focused on a 10-year JGB auction due this hour with global ramifications. We'll discuss the market mood with OCBC's head of global markets, Selena Ling, and later Amundi Investment Institute's Stears. Airbus having a turbulent week with its most popular jet. After sending global airlines scrambling to fix software on the A320, the model now faces issues with build quality. We get reaction from one of the world's biggest operators of the Airbus single-aisle jet. AirAsia CEO Tony Fernandes will be joining us in just a few minutes. And for more on how travel plans in Asia are shaping up, we hear from the CEO of Agoda on whether rising prices and weaker currencies are sending travelers to new destinations closer to home. We're tracking cautious trading across Asian markets today following a U.S. sell-off overnight in what's been a shaky start to December. Bitcoin stabilizing after leading earlier declines, touching lows of less than $84,000 in the U.S. session. Almost $1 billion of leveraged crypto positions were liquidated. The biggest cryptocurrency is now down almost 30% since October. Investors are also watching out for the results of Japan's final 10-year government bond auction of the year, expected later this hour. Yields are surging. As speculation grows, the BOJ may hike interest rates soon. A Markets Live strategist, Mark Cranfield, is calling this a global bond event coming amid a major bond sell-off across major developed economies. To break it all down, let's bring in Mark. Also joining us is cryptocurrency reporter Subhashri Ghosh. Mark, well, seems like no end to this sell-off. What are you anticipating?
It's going to be an extremely difficult day for people in the Japanese market. Yields have been rising pretty quickly. As you mentioned, it's been partly spurred by the fact that Governor Ueda yesterday pretty much made it an almost certainty that the Bank of Japan will raise interest rates this month. And when you listen to the politicians who've spoken today, particularly the finance minister, they seem to endorse that as well. So it seems to be full steam ahead for an interest rate hike in December. The problem is that it's coming at a time when Japanese investors really wanted to see the Bank of Japan even look forward into 2026 and be more committed to getting the interest rate to a neutral zone. Now, even if they raise interest rates this month, that's only 0.75 with the inflation rate running at 3%. So you can see still very negative yields in Japan. We've also got the 10-year yield around about 188 today, but heading towards that 2% area, which is where you may expect long-term investors to come in. So they may well wait for that rather than today's auction. On top of that, in 2 days' time, we have a 30-year JGB auction. And just today, 30-year yields hit a record high since the issuance of JGB. So you can see from the Japanese point of view, things are not going that well. On top of that, externally, we've had massive corporate issuance in the US that's pushing up the yield curve in America. They're expecting the Federal Reserve to come in and steepen the curve further by lowering interest rates this month and possibly with the new FOMC chairman into next year. All in all, it's a very difficult time for fixed income markets, and JGBs are right at the center of it.
You got to wonder where demand will come from. As you suggested earlier, I mean, they're unlikely to be buyers until 10 years get to 2%.
Yeah, they really will be looking to their domestic base. The life insurance companies in Japan have a long history of buying bonds, particularly the longer duration ones. 10-year is not especially attractive for them, but at 2%, maybe that is. Maybe that's the kind of target where they will finally put it into their portfolios. But getting there could still be pretty ugly. It could cause a lot of pain, particularly as they might want to see that before the end of the year. So these are pretty rapid by the standards of Japanese markets. These are unusually rapid and disconcerting moves. And it's going to be pretty edgy between now and that Bank of Japan meeting, which is still 2 weeks away.
And also for the overall bond market, Mark, it is about the Fed. I mean, expectations are that it will move in December. The question is, what happens after that?
That's a lot to do with, you've got the yield curve, the risk of steepening in the yield curve, because there's a lot of investors who don't think that the Fed shouldn't really be lowering interest rates so aggressively when it's uncertain what the path for inflation is in the United States, particularly because there's a big fiscal boost going on here. So our colleagues in London have been writing about this, saying that fiscal stimulus is pretty strong here. It's the strongest since Janet Yellen was the Treasury Secretary. They're ramping up spending, a lot of issuance of Treasury bills at the short end of the curve. So there's immense liquidity in the US market. That's not great for the long end of the Treasury curve. So that will unnerve investors there as well. That will spill over to the European markets as well, as we've seen. So there's a lack of conviction that treasuries are really a good store of long-term value. And it's a bad timing for it to come in the fourth quarter when people are trying to assess their portfolios going into next year. So all in all, the Fed's job is very difficult. Lowering interest rates and trying to convince people that the curve doesn't need to steepen is going to be a very hard sell. Jerome Powell will be treading a very careful path. At the same time, he knows that he won't be chairman for too much longer. A new person is going to be announced pretty soon.
And Subhashri, let's get you into this conversation. A lot of pain in the crypto space as well. Cryptocurrencies wiping out about $1 billion of leveraged positions. That is just on Monday alone.
Indeed, it is, Has, and as you rightly said, a lot of pain, and the sentiment continues to be quite bearish and cautious in the crypto market. We have seen some recovery overall in the last few hours, but again, this recovery doesn't look like convincing. We are not really seeing a lot of dip buying or value buying that traders say. On the lower end, flows have been quite slow and sluggish, which really means that the conviction is missing. We can see an index called Fear and Greed Index in crypto, which is at 23, denoting that there is extreme fear in the market. That again shows to the kind of mood that traders are when they have, as you rightly said, sold their levered positions worth $1 billion and sitting almost on liquid cash.
And when you take a look at Bitcoin, that level we're looking at for is 80,000 and inching ever closely to that.
Indeed, it is, and that's the key level that a lot of traders have cited to us as a big way that. After that, if you break through $80,000, then it can sharply fall downwards. Before that, there are some other support levels as well, like $82,000, and even before that, $85,500 on the Bitcoin. Those are the key kind of technical support levels that traders are watching. But yes, the mood is pretty much so bearish that we can't rule out an $80,000. That's at least one key level that traders are looking at. Yes, you're right.
And Mark, of course, the massive sell-off we're seeing in cryptocurrencies impacting risk sentiment as well, isn't it?
It is, but I think it probably got a little bit exaggerated during Monday's session, partly because it was happening in Asia when people were a little bit skittish after the weekend. So you could see by the time we got into US trading yesterday, American equities are much more stable. They started to recover. They ended down, but well off the worst periods of the day. If you look at the Bitcoin in particular, really started tumbling from about September, and yet S&P 500 has made several new highs since then. So really the big picture impact of cryptocurrencies on US equities is getting smaller all the time. It doesn't mean to say that you can't get worried about it on a very short-term basis. If we do get sharp sell-offs in Bitcoin and other cryptocurrencies, it can hurt sentiment, but really people are pretty steady. They're sure that the US market has enough liquidity in the equity space that we're probably going to grind higher in towards the end of the year. So it would need a really dramatic, maybe a 10% plus sell-off on one day for the major cryptos to really hurt equity markets before year end.
Markets Live strategist Mark Cranfield and crypto reporter Shivashri Ghosh, thank you so much for your time today. Let's get more market insights. Selena Ling, Chief Economist and Head of Global Markets Research and Strategy at OCBC. Selena, it feels like it is risk-off, but there's so much liquidity out there that could still be a rally at the end of the year.
Well, I think if you look back in the context of what has happened in the last 11 months, we've been through this roller coaster ride with Liberation Day, and then markets came back quite strongly after that because they figured, well, if the Fed's cutting rates, more central banks got room to ease monetary policy, so liquidity is going to be ample. But now we are approaching end of the year. It's been a very good year for a lot of risk asset classes. I think it wouldn't surprise me, if we get a bit more volatile market swings from here because people will be looking to take some money off the table.
So it's just a case of taking money off the table and not to do with risk, or how are you assessing that risk sentiment, risk appetite out there?
Well, I think if you look at the overall macro backdrop, people's kind of like settled on this rough Goldilocks type of scenario, right? We didn't have a US recession. Tariffs have come on their initial high levels. There is a trade truce between US and China. So what could go wrong, right? US president said he's solved so many wars. So, really, you're looking for the curveball up here. But generally, at this point in time, markets kind of like gotten a little bit more comfortable with the front and center headline risk. And they think that, barring any nasty surprises, it's going to be a slow grind down into the new year. I mean, we're coming off a very high base, of course.
There's been a lot of momentum and a lot of FOMO, fear of missing out. You see a lot of retail investors getting in the equity space, and now retail investors are getting into the bond space, the corporate bond space. Surely that is a sign to worry. I mean, when it comes to herd mentality, when people get in, you get out.
Yeah, so typically, you separate between the smart institutional investors and the retail money being the last ones to get in the party when it's winding down, and you worry about who's going to be last out of the door. But I'm not sure whether this time around that exact scenario will play out in the traditional way, partly because we have seen the way, central banks have evolved, right? In the past, they used to be the lender of last resort. These days, they tend to tremble and be the lender of first resort at any sign of emerging crisis, right? Just look at what happened with SVB, what happened with the private credit market shakeout earlier this year. So I think, we've gotten a point where a lot of the guardrails are already in place, so we will have market volatility, but I think it will take a really nasty surprise, to bring the whole deck of cards down.
So what do you do? Let's start with the bond market. Some suggesting that EM's the place to be, not DM's. There's been a reversal of fortune somewhat because they've gotten their house in order.
Well, I always say that ASEAN in particular has a stability premium, right? If you look at the macroeconomic conditions, growth is relatively stable, even though it's slowing. They've had a renewed tourism inflow. Inflation is fairly muted. Most of the Asian central banks are done or close to the bottom of their easing cycle. There is still a lot of wealth that's coming into this region. The China plus 1 plus 2 plus 3 story is still in our favor. And then in a very, very volatile world where there's US tariffs and, you're not sure where to put your money, and if the Fed is going to be cutting rates very aggressively next year with the new Fed chair, then Asian bond markets do look particularly attractive, especially in local currencies.
Well, the thing is, there's always been that promise of, the EM market, making a comeback. Is it different this time around? Are you actually seeing flows? Are people actually putting money, in the space?
I think if they are feeling worried about the longer-term dollar prospects and U.S. policy uncertainty, diversification makes sense. Then it's a question of where do you go for that diversification. So at this juncture, people are still a little bit concerned about the recovery prospects for China. ASEAN looks like a relatively neutral zone in this whole geopolitical tussle. So I know EM always has a little bit of that tinge of volatility when things start to go south. But I would think that this time around, you have to pick your markets, but it does look a little bit more stable.
Which markets? I mean, you talk about how things can change. We've seen that happen in the Philippines, in Thailand, for instance.
Well, you look at Malaysia. The ringgit has been a big outperformer this year, right? It's up about 8+% year to date. A lot of it is because growth is surprising on the upside. There is some momentum going on the electronics part. The Johor Singapore SEZ is gaining a lot of traction. So it does look like things are, at least generally moving in the right direction.
What do you do with China?
Well, for China, headline growth numbers don't tell the full story. They are likely to come in quite close to their full 5% target for this year, even though fourth quarter will slow down. It's always very uneven, right? The October numbers still suggest consumption is very weak. Businesses are a little bit worried about medium-term capex. There is still a lot of that anti-involution measures that will have to materialize. So the pressure is still on the downside as far as prices are concerned, right? But if you look at a 5-year plan, they're talking a lot about structural reform, especially on the medium term. So I think that's constructive. It's just that you're going to get a big bang bazooka type of stimulus plan that will spur, growth in the short term.
So it's just a matter of time before stimulus will trickle into the real economy.
I think what they're doing with respect to trying to improve private consumption and trying to basically stabilize the property market, those are really steps in the right direction. They may not show a very quick short-term payoff in what financial market players would like. But I think generally, if you look at it from a policy angle, these are the right moves. And anyway, the external demand conditions are not very favorable to China right now.
Anything you would be buying in China?
I think I am still a little bit hesitant for China for now, because if you look on the monetary policy side, the third quarter monetary policy statement suggests that they are not going to go for broad-based easing. So we have actually pushed out our interest rate cut to 2026 itself. So bonds also may be a little bit limited in terms of gains, right? Equities had a good run, okay? I think if you are a firm believer in some of the advanced manufacturing tech stories, you may be trying to look for potential winners in that space. But the whole high-tech industry, as we discussed earlier, is evolving so rapidly. It's hard to predict whether the winners of today is going to be the winners of the future.
And also Japan in focus, the BOJ in particular, expectations now really high for a move higher in December, perhaps even 2 moves in 2026. What are your own expectations? How might this play out in terms of the JPY?
Well, it's interesting that you asked that, because November has been what I would characterize as a whole round trip, right? Look at where US equities went, look at where the bond yields are, whether it's in the US treasuries. And our base case has always been that the Fed would cut in December, and also the BOJ would hike in December. But market expectations obviously got swung left and right and center because of what happened with the government shutdown, the lack of data, and of course on the Japanese side because of the new leader and the whole China-Japan spat. So that caused some pullback in terms of the central bank expectations. But I do think they are on track to hike. Wage growth has been quite supportive, and I think generally price inflation is on track. So I don't really see any reason for them not to hike in December, and we do have one more hike penciled in for early 2026.
So for the whole of 2026, perhaps 2?
It's possible. It really has to depend on how the price momentum continues to play out. Obviously, we are coming to a case where people will look at the U.S. Treasuries yields and Japanese JGB yields and say the relative differential story and the monetary policy divergence story, is it going to come into sharper focus in 2026 itself? I know we haven't talked about the Fed chair changes, but it does look like the composition of the Fed is really going to lean towards the dovish side. I mean, you already have outright
Is likely to be Hassett?
Well, I think whoever it is going to be a dove for sure, right? We already have Miran calling for 50 basis point cuts. You have other doves like Bowman and Waller, etc. They have a clear majority, I think, for the FOMC members, the voting members. So I think it's a question of whether market is going to come around to the idea that the Fed may be at risk of cutting faster and steeper than what is already currently priced in.
So dollar yen could get to 153 perhaps? 154, thereabouts?
Well, I mean, we are in the year-end period where, traders are all starting to clear their leave. Liquidity is going to go down. So I wouldn't be surprised if we get, more volatile swings from here.
All right. Selena, thank you so much for your time. Selena Ling, OCBC. Still to come on Inside, we hear from Japan Exchange Group CEO Hiromi Yamaji on the rise of shareholder activism and what it means for Japanese markets. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Japan Exchange Group CEO Hiromi Yamaji says activist investors are not yet a dominant force in Japan, even as they push for more from corporate Japan. Speaking on a panel at FII Priority Asia in Tokyo, Yamaji discussed whether these investors affect the business.
As a market operator, we are quite neutral about those activists, or I call them engagement funds, just because we need to have everybody in our market in order to keep the abundant liquidity. So we don't reject any specific kind of investor, or we don't show any favor to one specific type of investor, but we welcome everybody. But at the same time, I think there are a number of shareholders' proposals in our shareholders' meeting, and some of them, this year, by the way, 114 companies received 399 shareholder proposals. This is just in June this year. And about 137 was from the so-called activists. And only 7 of them passed at the AGM. And probably market cap-wise at this moment, about 1% of the total entire market cap is owned by the activists. I think UK is about 2% of the entire market cap, and the US is 1.1%. So we are not so much, the engagement funds is not so dominant in Japan yet.
You expect more activism in 2026? And
Well, yes and no. Some of them, yes. Some of the proposals from the activists are not so illogical or unreasonable. I think some of them are quite reasonable, and I think I'd like to encourage management to be direct to those engagement funds, to have a direct conversation with them.
And that was Japan Exchange Group CEO Hiromi Yamaji speaking on a panel at FII Priority Asia in Tokyo. Let's do a check on how Asian markets are doing ahead of that crucial JGB 10-year auction expected today. Today's auction is a big test for traders amid Governor Ueda's modestly hawkish comments. Also, Japan's finance ministry planning to increase its issuance of short-term bonds as well as treasury bills. In terms of the Nikkei futures, currently up by 0.3%, and dollar yen trading at 155.67. It is lower by a 1% versus the USD. Flip the page, take a look at where we are in terms of cryptocurrencies. They continue to trend downwards, a slump for Bitcoin, currently at 86,351. Some say keep a watch on the 80,000 level. Of course, some say it is a reflection of risk sentiment in the market. Crypto downturn wiping out about $1 billion of leverage bets on Monday alone. Still to come. We'll unpack the impact of Airbus's ongoing challenges with one of the largest operators of the A320s, AirAsia CEO Tony Fernandes, will be joining us very shortly. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Airbus stock fell the most since April after the plane maker revealed that inspections are needed for hundreds of its best-selling A320 jets over potential flaws in the aircraft's body. The process risks complicating the company's effort to meet its delivery target and comes just days after Airbus was forced into its biggest ever recall, also involving the A320. For more, let's bring in Bloomberg Transport reporter Danny Lee. Danny, what do you make of this? First, the software glitch, then the fuselage. Really trouble after trouble.
Yeah, for Airbus, making one of the world's best-selling aircraft, this is not welcome news after dealing with one effective crisis over the weekend, the revelation of quality issues this time involving its best-selling jet. We don't necessarily know quite how many jets are affected. The statement from Airbus kind of indicated that this was something related to aircraft that were in production or had been handed over recently to customers. But we also don't know what kind of airlines are involved and are impacted. So we are still awaiting the details from that. But clearly, for Airbus, who is under great pressure to hit delivery targets of greater magnitude, and to fulfill the levels of demand that airlines want to see jets handed over because of the huge demand in air travel, this is a blow given what is seen as being a very reliable supplier of aircraft.
What's been the reaction from airlines? I mean, is it impacting sentiment, confidence in any way?
I think that kind of feeling remains to be seen, particularly as airlines who are very, Airbus is very sensitive to customer feedback, will be keeping that kind of conversation in private. We do know that Airbus has been having conversations with some of its top customers, including the likes of AirAsia over the weekend related to the software issue. But I'm sure any of those more harsh words that customers have with Airbus, even especially as this new revelation comes to light, they will try to keep it in private. But I know airlines are probably not amused given that they've already seen a lot of delays on their new delivery of aircraft.
Bloomberg Transport reporter Danny Lee, thank you. And speaking of AirAsia, it is among the largest operators of the A320 with more than 200 in its fleet. Joining us now, CEO Tony Fernandes. Tony, we heard from Airbus, the software glitch, the fuselage issues. How are you responding to all of that? What's been your reaction to all of that?
We're, Airbus were great. They gave us heads up. Christian Scherer called me straight away. There was a little bit of confusion on the actual problem, but as soon as we got that message, our team did an incredible job, and we were able to sort out 96 aircraft in about 24 hours. So we had no operational major delays caused by this software glitch.
How about the fuselage issue? What's your own understanding?
We saw the notice. I don't think it's major. It's a few panels that they have to fix. It's on impending aircraft. Again, I don't see a major delay. We haven't been given any notification of any delays caused by it. So, what appeared to be a massive crisis, I think through good communication, good crisis management, we were able to avoid a major disaster.
So just to be sure, it will not impact upcoming delays, and it's not impacting, the aircraft that have been recently delivered to you?
No. No issue on the panels. In terms of the software, after getting the full information, it was mostly a software downgrade, which our team were able to do per aircraft about an hour and a half. And honestly, my team did an incredible job, and I'm sure many, many airlines did that as well. So no operational delays.
We've seen a host of issues to do with supply chains, with engines, and now issues to do with fuselage and software. Do these issues shake your confidence in Airbus in any way? How are you assessing the reliability of Airbus?
Well, look, I've been one of Airbus's first customers in Asia. We have an order book of delivered about 250 aircraft, and we have another 350 on order. We're very, very close to them. We feel that they produce excellent product. Obviously, supply chain issues have been a problem, especially engines. But I think we're over the worst of it. And I'm hoping by 2026, even in AirAsia's case, we have to bring back 230 planes. Our numbers have been crippled by the fact that we haven't had all our planes in operation, in spite of having a fantastic third quarter where we delivered 1 billion ringgit of EBITDA. I think fourth quarter, we will have all our planes back. We had our last issues with GE. And I think for most airlines, 2026 should be really the end of all these COVID issues and begin to see some stability in the supply chain as well.
As you said, you're among the biggest operators of the A320s. I mean, when it comes to the A320s, it is the most used aircraft. Help our viewers understand how rare are these hiccups that we're addressing right now?
I think it's the first time in my 20-odd years of AirAsia that we received a global notification such as this. I've never received a notice where all 6,000 aircraft had to be checked. So it was the first time, It is a good warning to Airbus and its supply chain operators to test things out properly. But it seemed a very odd one that solar radiation affected the software. It's kind of bizarre for me. But, I applaud Christian Scherer for calling me personally amongst many airlines. That gave us a good head start. And I think, I applaud OEMs that actually go on the front foot and work with airlines quickly. It's been one of my biggest issues during COVID that many OEMs weren't proactive enough in helping airlines during this very difficult period. But I remain very, very confident and optimistic of airline manufacturers, especially Airbus.
Why do you think we're seeing more and more manufacturing disclosures? Is it a case of perhaps the likes of Airbus are trying to produce as many planes as possible to meet the increasing demand from airlines?
Well, I think it's, there is a huge amount of orders per month versus what I started with. Airbus have ramped up its production tremendously. On top of that, technology is changing very fast. And in this case, software providers, missed out something. So I think it's a combination of increasing orders, trying to meet sustainability issues and make the aircraft more efficient, competition in the market, which is maybe putting a little bit of extra pressure. And so, I always say to all OEMs, take a step back and make sure that you can handle this ramp up. Make sure you test software properly. Don't rush out. We, outside of aviation, we had a massive problem with cybersecurity, like CrowdStrike releasing something which wasn't fully tested. So I think the pressures of quarterly results, sometimes the pressures of competition, probably the quality drops a little bit. So it's a good warning for everybody.
As you indicated, Tony, there was limited disruption, but I'm sure there's still a cost. Is there a cost to that disruption?
Of course.
Whose cost will that be, Tony?
Well, the biggest cost is to my health. Sitting at 10:30 and suddenly receiving a notification like that. So I'll be sending my yearly checkup to Airbus to pay for. It wasn't a major cost, to be honest, but a lot of time, a lot of effort. But it did show the amazing resilience of our airline, which I continue to tell everybody. We had a fantastic third quarter. Today, capital A, finally, my vision of capturing value outside of the airline has been encapsulated with a doubling of the share price. And so, there are enormous pressures. There's a little bit of cost, but really the major cost of COVID is now coming to an end. And I'm really optimistic about 26.
Any way of quantifying that minimal cost that you mentioned?
No, I don't. I honestly think it's negligible. Apart from a lot of man hours, it's not changing our numbers at all. No.
And Tony, to your knowledge, do you think any other aircraft might be impacted by this at all?
I've been through too much to say never. It's a good warning. Obviously, you've seen a lot of issues at Boeing. So I think all aircraft manufacturers have to really redouble their efforts. I've said it for a while, even with the OEMs like engines, customer service, customer satisfaction has to come ahead of short-term quarterly profits. I think most OEMs are recording record profits, but I throw caution to the wind that can turn very quickly if you don't maintain your quality and supply chain as well. So it's a good warning. It could have been much worse, and thank God it wasn't.
You express optimism for 2026. What kind of numbers are you anticipating? What's the demand that you're anticipating?
Yeah, well, demand is incredibly strong, and we're moving on to the next chapter of our growth, which is creating a hub and spoke airline. 10% of our customers fly and connect. We're looking at a new order book to bring in more aircraft, a smaller gauge that will enable us to create an even deeper network. ASEAN is very bullish. India is strong. China, Japan, Korea, and Australia. We started going westward into Kazakhstan, Uzbekistan, and now Turkey. So there's a huge appetite for travel. We're creating this new kind of hub and spoke product. So I see demand very strong. You know, our costs keep going down. We have a tailwind with oil and currencies. And so low fares means a greater appetite for travel. And we're feeling good. You know, we had a 23% EBITDA margin, which is remarkable if you think that we still had 15 of our planes on our ground. So demand remains strong. We can't get enough planes quick enough.
But the question really is, how strong is that demand? 20, 30, 40%? What's the number you're looking at?
Well, I can't declare that just yet, but demand is strong. I can't because we're a public company. But, you know, we're growing again. We're adding 15 planes next year. Honestly, we could add 30 planes. So that gives you a sense that we believe we could grow 10 to 15% easily. So we'll have to wait and see, but demand is robust.
We know that you're talking to Airbus, Embraer, and COMAC. What's the status of those conversations? Are you any closer to making a decision of who you will go with for your additional aircraft?
Yeah, we're getting close. We're getting close. I think, these aircraft come with different engines. We have been a GE engine provider. I mean, COMAC is also the GE engine, but Embraer has a Pratt & Whitney. We have to make absolutely sure we're going to get the right cost structure, but more importantly, that all the OEMs can deal with our very aggressive flying targets. And so we want to make absolutely sure that we give a fantastic low-cost product. So, we're months away as opposed to days away, but we're making good progress.
How much will engines be a factor in your final decision?
70%.
70%?
I mean, that's a percentage coming out of my head. But really, what I'm trying to say is, it's just the most important. It's the most important part of choosing this aircraft.
And Tony, as we inch ever closer to 2026, what's the biggest risk, you think? I mean, we're seeing a lot of flashpoints around the world, uncertainties in terms of, trade relations. What's the biggest risk for your business?
Wow. Haslinda, I've been through every risk known to mankind. We've just come out of COVID. We've had trade wars. We've had oil spikes. We really can't predict what the latest risk is. But all I can say is, AirAsia has been well tested. We have a very slick operation, judging by what we went through. We're going to have all our planes back. We're going to improve our customer service because we'll have more spare planes. Demand is strong. We'll take whatever risk that comes. But right now, where I'm sitting, 26 looks a lot better than it was. Even trade wars have probably been a little bit of an advantage for us because geopolitically, more people are flying in our part of the world and staying in our part of the world than moving to Europe or America. So that's probably been a benefit. If Ukraine and Russia solves this issue, then oil price and jet craft is going to come down. It will be a massive bonus. For me, as long as I can stimulate demand through low fares, and really our bread and butter is connecting cities and connecting routes that were never connected, then I think we have a fantastic 2026 coming up. The most important thing is...
Tony, thanks so much for joining us today. Go ahead, Tony.
I was just going to say, it's fantastic looking at this outlook. Over the last 6 years, I don't think anyone gave us a time of day of surviving. Yet we've created a very strong airline, and more importantly, we've created 5 amazing companies in capital A, where the value is now being seen. So we've risen from the dead, and we're looking forward to the future.
Tony Fernandes, we thank you so much for joining us out of Bangkok. Tony Fernandes, CEO of AirAsia. And, of course, we've been keeping an eye on that 10-year JGB auction. That saw pretty much stronger demand than its 12-month average. The bid-to-cover ratio was 3.59 versus 2.97 at the last auction. And the 12-month average is 3.2. Again, better than anticipated. Now, Taiwan's foreign minister says a bitter diplomatic dispute between China and Japan could stretch on for a year, even as Taipei hopes the two sides can find a way to ease tensions. Chia-lung spoke exclusively to our chief North Asia correspondent, Stephen Angle.
It's not just a different policy change from the Japanese side, but for Beijing side, maybe take maybe a year to stabilize the situation.
And stay tuned for more from that exclusive interview with Taiwan's foreign minister in the next hour of Insight. Plus, the outlook just ahead. We get an outlook for travel next in an exclusive interview with Agoda CEO. Much more ahead. Keep it here with us. This is Bloomberg. Welcome back to Insight. Here's a look at Asian currencies. The strong dollar and rising prices are becoming a crucial factor for travelers. Agoda has revealed its 2026 travel outlook report, highlighting trends set to influence travel across Asia in the coming year. Travelers are looking beyond familiar hotspots to secondary cities in Asia. According to the report, the main reason they are exploring these places is lower costs. Our next guest runs Agoda, a digital travel platform with a global network of over 6 million holiday properties and more than 130,000 flight routes. The company has released its Travel Outlook 2026 report, highlighting industry trends and insights for the coming year. Joining us exclusively, Agoda CEO Omri Morgenshtern. Omri, good to have you with us. So it seems like Forex is a major factor for travelers.
First, thank you for having me. And yes, I think price in local currency, general price is what I sometimes refer to as the ultimate enabler of travel. So we know from our report that about 40% of the travelers are planning to spend a little bit shy of 10% of the annual income on travel. So it's a big expense. And we know that they want to get as much as they can with their money. So we definitely see the movements of every dollar impacting travelers.
So when it comes to currencies, the Japanese yen is one to watch, Indian rupee. I mean, are you seeing, numbers growing exponentially for these markets? What are you seeing from your own report?
So it's very hard to differentiate sometimes the currency changes from other macroeconomics factors. Those tend to go hand in hand. But we're definitely seeing what we've seen in the past, that when the yen was weaker, then we've seen what looked like a more surge of traveling into Japan, etc. And as I mentioned before, we do see that when prices are cheaper, that stimulates, especially, we see it a lot with promos. Sometimes
Omri?
There are promos. Yes, please.
Omri, give me a second. We have just breaking news here. Speaking of currencies, the Indian rupee has fallen to a new record low of 89.7850 versus the USD. Again, the Indian rupee testing yet another record low, 89.7850 versus the USD. As we were saying, Omri, the currency does play a part in the Indian rupee again, testing a new low. Go ahead with your own thoughts.
So what I want to say, but look, the underlying thing is that things fluctuate. And over time, I think travelers are definitely looking for opportunities. When the local currency is weak, I think it will mean the travelers are more susceptible to travel domestically. And they're definitely looking for opportunities when it's cheaper to go internationally and take that opportunity.
And of course, one trend that's developing is AI. Talk to us about perhaps one, bold AI trend that can be expected that is beyond people's imagination right now.
So I think, look, it's very hard not to look at an AI company demo without some travel. example. Usually it's around trip planning. So I definitely think that that you're seeing a lot of disruption in the how we plan trips and put them together, itineraries, etc. But I think the broader story here is what we call the connected trip, which is at least the vision is to be able to give you the same experience of a travel agent that works for you, knows you very, very well, not only helps you put the trip together, but also is with you as you travel and takes care of anything that can go wrong. And I think we've been on that trajectory, by the way, before AI, but AI greatly expedited that process. And I think it's not far away before this type of experience that your own, call it travel concierge, will emerge, and you see it happening more and more on our platforms.
People talk about how AI could lead to a filter bubble where it suggests, mainstream places, not the unconventional ones. What's your take on that?
I actually think the opposite. I think AI, since the ability to personalize the travel trip, not only to your preference, but also to your budget, is much more available with AI. And at the same time, AI has much deeper knowledge of opportunities and places to go, way more than mainstream. I think the likelihood that you can match a traveler with a non-standard experience is actually increasing, not decreasing. So I actually see AI as an enabler of sending travelers to more interesting exotic destinations that they would typically won't get to.
Omri, thank you so much for your time. Omri Morgenshtern, CEO of Agoda. Still ahead on the show, Amundi Investment Institute's Guy Steers will be joining us to discuss the outlook for global markets and the AI trade. Plus, we'll hear exclusively from Taiwan's Foreign Minister Ling Chia-lung, with the island at the center of a heated diplomatic dispute between China and Japan. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Taiwan's foreign minister says a bitter diplomatic dispute between China and Japan could stretch on for a year, even as Taipei hopes the two sides can find a way to ease tensions. Ling Chia-lung spoke exclusively to our Chief North Asia correspondent, Stephen Angle.
It's not just a different policy change. From the Japanese side, but for Beijing side, maybe take maybe a year to stabilize the situation.
And stay tuned for more from that exclusive interview with Taiwan's foreign minister later this hour on Insight. Meanwhile, we're tracking cautious trading across Asian markets today following a U.S. sell-off in what's been a shaky start to December. The Indian rupee touching a fresh record low against the USD, inching closer toward the 90 level. Also on the radar today, Japan's 10-year government bond auction saw stronger demand than its 12-month average. The bid-to-cover ratio was 3.59 versus 2.97 at the last auction. 12-month average is 3.2. And Bitcoin also stabilizing after touching lows of under $84,000 in the U.S. session, as almost $1 billion of leveraged crypto positions were liquidated. The biggest cryptocurrency is now down almost 30% since October. Let's get perspective with Guy Steers, Head of Developed Market Strategy at Amundi Investment Institute. Guy, good to have you with us. What do you make of the risk-off sentiment in the market kicking off December?
I think a lot of it is still a bit of similar to what we saw through November. So we had two waves in November of sort of profit-taking and position squaring. It's been a good year for U.S. equities in general. I mean, certainly a better year than we might have thought at the end of April. The market has really recovered since then. So I think there's still quite a lot of profits to be taken and people taking those profits at the moment. So part of it is seasonal. I think a second part of it is concern about two factors with AI. The first is what is the ultimate profitability of AI investments going to be? And secondly, and probably I think more importantly, how are those AI investments going to be funded? So I think that's going to be a continued theme over 2026. But if we obviously we've had a lot of pullbacks and recoveries I think we're in a pullback phase right now, and we'll probably be in a recovery phase again before the end of the month.
So how will AI investment be funded? Are we looking at more issuances? What are you anticipating? How might this play out in the market?
I think the big question is, as you say, I think there's going to be a lot more bond issuance and debt issuance to fund CapEx in general over the course of 2026. At the beginning of the year, what we saw was that AI investments were really funded through free cash flow. And in some companies, that's still the case because free cash flow growth has been very strong. If you look at overall investment as a percentage of free cash flow, in the third quarter, it's not even back to where we were in 2015. So free cash flow is very strong, not just for AI companies, but for US companies more broadly. But there are some companies, and I think this will be more and more the case, that free cash flow is not enough to fund their investments. So they're going to be needing to do more. I should say operating cash flow is not enough to fund their investments. They'll be needing to borrow more. So I think we're going to see more growth in investment grade, more growth in high yield. But investment grade credit could particularly grow more than we expect at the moment, or more than the market expects at the moment in 2026.
And guys, speaking of the bond market, we saw that global sell-off among G10 nations. All eyes were on the 10-year JGB auction. That came in better than anticipated. Might this, I guess, provide some support in the bond market?
Well, I think, yes, for government bonds, Japan has seen yields rise almost consistently over the course of 2025. I think there is a chance that there's a couple of factors here. I think there is a chance that we could see 10 years test 2% at some point in the not so distant future. So there's still expectations of more expansionary fiscal policy in training higher inflation. And we're looking for a couple of hikes as well from the Bank of Japan over the coming quarters. But we're getting to levels in terms of Japanese yields where for Japanese investors, it's becoming interesting to bring money back to Japan. So I think that this rise in Japanese yields will not continue ad infinitum. I think we're closer to the end of the rise in Japanese yields than we are certainly to the beginning.
So when might we see that repatriation, money coming back to Japan?
Well, I think it's probably, again, there's going to be some seasonal factors here, possibly before the end of the Japanese fiscal year. So we're really talking about the first quarter of next year. And again, part of it will be level driven. So I would really look for 2% on 10 years to be a level at which we really start to see a lot of repatriation domestic flows. But I think, although the mood is a little bit better at the moment, we probably will still have at least one more test to the upside in terms of Japanese yields.
And Guy, how about treasuries? I mean, we know that it's about the Fed moves. It's, I guess, fully priced in. We'll see that rate cut in December. The question is what happens in 2026? And I guess it also depends on who takes over from Jerome Powell. Poly Market has the bet on Hassett. What are your own, I guess, assumptions?
Well, I think that we need to separate two things there. I think, first of all, the U.S. economy is slowing down, and that does warrant at least another couple of rate cuts. As you say, we also think that the market will be cutting in December. We think there'll be another couple of cuts, most probably in the second quarter. So we may see a little bit of a pause in the first quarter, but that's another 75 basis points from where we are now seems warranted. However, it's quite possible that with the change of the administration of the Fed, we could see somebody coming in and a team coming in really, which wants to have even more aggressive rate cuts, which can take sort of key rates to or below the 3% level. And that's going to be good for treasuries in the sense that there can be a downward translation of the curve. But I think what we're really going to be seeing there is higher inflation expectations coming in. So we're probably going to see higher break-evens in the 10-year area. We're going to see a steeper curve between 2 years and 10 years, between 5 years and 30 years. So I think it's going to be more curve steepening trades, more anti-inflation trades that will dominate, even if the front end continues to see lower yields.
And we'll see a weaker dollar, won't we?
I think so. I mean, I think our view is in the first half of 2026, we probably will see a weaker dollar. We'll see it weaken certainly against the euro, but really across the board. The dollar will probably be weaker. But somewhere around the second half of the year, if we start to see growing investment, that's probably going to require that foreign investors put money into the US. So a lot of it in the second half of the year, I think the first half of the year will be determined by or dominated by monetary policy. And the second half of the year will be much more dominated by capital flows. So although we can see a dollar weakness at the beginning of the year, say first quarter, maybe second quarter, in the third and fourth quarter, we could very much see the dollar improve and recover.
Gold, of course, has taken the market by surprise in 2025. Do you see more upside for the yellow metal, especially on the back of expectations that could be a deal for Ukraine?
Well, I think that the real question about the dollar in the long term is, I think there's two. One is what's the view of global investors about the strength of the US dollar and the ability to put money in the US. And if there's a little bit of concern about that, people will be looking for diversification trades. And I think the strength of the dollar, particularly in 2025, and maybe even in 2024, has really been about that. So this strength of the dollar, we think, can continue through 2026. It does seem likely to us that the dollar would test 5,000, probably early 2027. So there's still upside for the dollar over the next 12-month period.
What is the one factor that could derail your projections?
I think there are several, actually. I mean, I think that the one thing which could be very significant would be a real lack of confidence in terms of AI and a real lack of confidence in terms of the return on investment from AI and whether the technology ultimately pays off for the companies which are leading the race to develop it. If that were the case, we would see a much bigger pullback in terms of the US equity market. We'd probably see declines of 15 to 20%. That would mean that there would be a flight to quality into fixed income. So US 10-year yields would be down below 4%, and people wouldn't be too worried about the inflation implications. They'd be just more saying, I need to put my money in somewhere safe. We'd see a rally in terms of sovereign bonds across the globe. So it would be led by the US, but European sovereign bonds would be rallying, Japanese sovereign bonds too. And so I think that we do need to keep in mind that it is a question of confidence, and weakness would start in the equity markets, and you would see big moves in other markets as well.
Guy, hang tight. Guy Steers is staying with us still ahead this hour. Nvidia invests $2 billion in chip design software maker Synopsys as part of a broader engineering and design tie-up. We'll have details coming right up. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Shares of chip design software maker Synopsys jumped, with Nvidia investing $2 billion in the company as part of a broader engineering and design tie-up. CEO Jensen Huang says the move will help infuse Nvidia's AI computing technology into more industries.
This is one of the largest compute-intensive industries in the world. Has not been serviced, not been addressed by accelerated computing until now. And we're accelerating that process with our deep partnership. Together, we will address nearly every industry.
For more, let's bring in Asia tech correspondent Annabelle Drewlers. Belle, what's being said about this?
Well, what's being said essentially is that there were some concerns being raised once again. Are we looking at another circular deal here? And that's not exactly the case. But just to sort of step back and look at the financials first, because this is an investment, as you said, it's a multi-billion-dollar investment, but you're looking at around 2.6% of outstanding stock for Synopsys that Nvidia has just snapped up at around $415 a share. So to provide the context of what Synopsys does as well, so you've got companies like ARM, for instance, that's more on the chip IP side, but then you need the software to design that chip, also validate that chip or test that chip before it goes into production. And that's where Synopsys comes into the picture here. So essentially what is going to happen is that Synopsys is going to be integrating NVIDIA software, namely GPUs, across its architecture essentially, or its software systems. And so the company's also saying, and you just heard both of those executives there, or Jensen Huang in particular, but they're going to also be looking at integrating or developing a new AI agent together, but also looking at joint marketing efforts as well. So yes, going back to that question around, are we looking at another circular deal from Nvidia's perspective? No, this is not tied to any sort of specific purchase agreements, and so that's why they're not saying it's circular in nature. He did also speak about what he hopes to achieve from this. Jensen Huang, you heard there just sort of that broader outline, but essentially it's about looking up or speeding the adoption of AI across a range of different industries.
And Belle, Deepseek debuting 2 new AI models. What do we know about them?
Yeah, that's right. So this is a follow-on essentially from what we saw from the company back in September of this year. So at that point, China unveiled, or Deepseek unveiled, what was called Deepseek V3.2X, or what is essentially its experimental status. So that was back in September of this year. Now we've actually got 2 new versions of this AI model that have been brought into the market. So you've got the V3.2, and Deepseek is saying that this is an agent, or a tool rather, a general purpose tool that has performance that's comparable to what you get from ChatGPT 5, so the latest iteration of OpenAI's offering. They're also saying that it has some agentic capabilities built into it, so that's more like human reasoning-like abilities, where it can, for instance, search websites, use calculators, execute on code. So that's one. The second model that it's also just brought to market is what's called the V3.2 Special, and this is a model that actually can look at more mathematical computations, other long-form thinking computations or capabilities, and this is about essentially pushing the inference of what's available to OpenAI or open source models, their limits, also just looking at the boundaries of what model capabilities can achieve as well. And they're saying that this V3.2 Special has performance that's similar to Google's latest from Gemini 3 Pro. So essentially what Deepseek is saying here is that you've got 2 models that can beat, or they can match at least what's deemed to be the best on the market from the US. That's ChatGPT 5 and also Gemini 3 Pro. But they're, again, able to do more with less, because, as we know, Deepseek is a lot less capitalized. It's got a lot less access, or really not access, to the most advanced chips on the market, and also far less human resources building up these efforts too.
And the competition intensifies. Belle, thank you. Bloomberg Asia Tech correspondent Annabelle Drew is there. Guy Steers from Amundi Investment Institute is back with us. Guy, what do you make of developments in Deepseek? I mean, coming up with 2 new models, you know, it could rival the best in the market. Again, we come back to the US versus China AI capabilities.
I think your colleague Belle really explained well what's going on in terms of the Chinese investment, in terms of in terms of Deepseek's investment and development. And in a sense, I might say competition is really good, because we're seeing a lot of different thrusts. But the question is it good for the valuation of U.S. equities, which I think is really the question we want to put our finger on. I think it's good for companies which are like Nvidia, which are part of the infrastructure, which people are going to need in terms of developing new models, in terms of using models, in terms of continuing to train models, because we think about a model being finished, but in fact, it's always going to need to be trained on new data. We're always going to continue to see data developing, and things are going to change. And so the models will react in terms of the data, and they'll need to continue to be refined over time. But what I would say is that the more sort of excitement we get, the more investment we're going to get, the more the continued theme of AI investment and seeing what AI can do is going to continue. And our view is that the big opportunities in terms of equity markets and in terms of investments are probably now beyond AI, but thinking more about what are the industries and the sectors which are going to be changed and improved by AI. So I think in 2026 and 2027, what we're really going to see is much more focus on things like robotics, drones, transport, biotechnology, which are sectors which can be radically changed by AI. And the question will be, which business models and where are we able to develop businesses which will really take advantage of this new technology and really change? So I think that's something that we're working on, and I think a lot of other equity investors are thinking about in terms of their 2026 strategies.
The thing is, Guy, when you hear stories about developments made by Deepseek, you tend to question the valuation of Nvidia. I mean, if one company, a Chinese company, can do things better and cheaper, then you wonder if the investment made by the likes of Nvidia is justified. What benchmarks, how are you assessing whether or not, the valuations for companies like Nvidia is sustainable or overstretched?
Well, I think there's two good points you bring in there. I mean, one is that the way you typically think about this is you look at what kind of profit are companies generating today and what kind of profit growth or even maintenance of profit are we looking for in the future. If you take Nvidia, in the Q3 figures, their operating margins were 62%, which is just incredible. But what you also see when you look at the semiconductor cycle over time is that a typical semiconductor cycle is about 2 years of growth, and then we have a pullback. And we've been through 7-8 quarters of growth now. So there are cycles which have lasted longer, but we're really already at the point where we're at a median cycle in terms of the semiconductor industry. And Nvidia is a very special company, but that's really the way you should think about it in terms of the type of structure that it has. So we may see a pullback in terms of margins going forward, a sort of cyclical pullback in terms of margins. But from current levels, even if margins fall by half, we're still looking at a very profitable company, a very healthy company. So from a pure valuation standpoint, yes, it's definitely justifiable, these kind of valuations that we have, both in terms of margins and in terms of the growth that they've had historically and the growth that they will probably continue to have over the next 5 years. Having said all that, when you compare the multiples of U.S. companies to Chinese companies trade at multiples which are roughly half. So I think one strategy that every investor should be thinking about, equity investor should be thinking about, is diversification. With the concentration in the U.S. market, geographic diversification is tremendously important and will be in 2026.
How should investors think about their AI exposure in equities, in credit, in alternatives?
Well, I think more broadly, given the concentration levels, diversification is absolutely critical. And when we think about that, we're talking about geographic diversification as much or maybe more than we're talking about sector diversification in terms of the U.S. And by geographic diversification, I would say there's two things to think about. The first is that emerging market equities had an excellent year in 2025, but they're coming off really a decade or more of disappointment. So they're still relatively cheap. Chinese tech is part of that, but it's more broad. Things like the Indian equity market, where valuations are attractive, where there's a lot of consumer demand, where there's good changes in terms of the government policy favoring equity investments and company profitability. This is part of a strategy in terms of equity. So diversification, where part of it is emerging markets, which we think are at the beginning of a multi-year improvement. Part of it is also Europe. European equities are cheap, particularly European small caps are cheap. They trade at cheap multiples relative to their history, relative to big caps in Europe, relative to the US, of course. And I think that Europe in particular is an area which is going to benefit from this second wave of seeing how AI will change industries. So that geographic diversification, I think, is really important in terms of portfolios in 2026.
When it comes to AI, it's also about regulation. I'm wondering if regulation will shape, the AI investment landscape, and if so, how do you see this playing out?
Well, I think, yes, certainly it depends. At the moment, we have a fairly libertarian freestyle approach to letting people develop AI. That may change in the future. I think one of the things that maybe in the medium term may become an issue is whether AI profits are taxed to actually support individuals. And that wouldn't just be in the US, it would be sort of across the globe. But I think we're probably not in the phase at the moment where regulation is a big driver in terms of thinking about the valuation of these companies. As you say, this may be a question for 2 or 3 years down the line, and certainly we need to keep an eye on how regulation is changing. But I think it's not the most important thing at the moment. As you say, it's really the barriers to entry. How high are the barriers to entry? in this technology, and how special and profitable is the technology itself? Those are really the questions we need to understand as we make these investments.
Guy, great perspective there. Thank you so much for that. Guy Steers, Head of Developed Market Strategy at Amundi Investment Institute. Still to come, Taiwan's foreign minister warns that China and Japan's bitter dispute over the island may take a year to resolve. Our exclusive conversation with Chia-lung is next. Keep it here with us. This is Bloomberg. Welcome back to Insight. Taiwan's foreign minister says the current dispute over the island between China and Japan could drag on for a year. Our Chief North Asia correspondent, Stephen Angle, has just spoken exclusively with Chia-lung and joins us now from Taipei. What did we hear, Steve?
Yeah, obviously, it's a hot-button issue right now that's going into its second month now in December after Tachikawa-san, the Japanese prime minister, made those comments before lawmakers in Japan that essentially angered Beijing. Obviously, we've heard about the different boycotts of Japanese products and the Ministry of Foreign Affairs in Beijing and its very strident comments lashing out at Tachikawa's statement. So we did need to hear from Taiwan because they're the party that is at the center of her comments about basically a survival scenario for Japan. So essentially linking Japan's survival to Taiwan's survival, and that has obviously angered Beijing. Now, in a wide-ranging interview, we did talk about why essentially Taipei is kind of trying to dial back the tension and says, it's going to be about a year at least of frayed tension between Japan and Beijing.
So we have very good communication channels with the Japanese government. So we are trying to manage the situation to avoid it's become a situation out of control. So because...
So are you saying you're downplaying it? Because the response so far from Lai Ching-te, the president, has been fairly muted.
Yes. So we show our support through a soft approach, suggesting that our people to travel to Japan, also to eat Japanese food. So we want to help cool down the situation, because once the Chinese nationalist sentiments stimulated, it will very, to some extent, out of control. So I think for Beijing, it also not in its interest to escalate the conflict.
Do you believe, though, with Prime Minister Takaichi-san essentially linking Japan's security to Taiwan's security, does that indicate to you that Japan is willing to shoulder more of the security requirements, either diplomatically or militarily, in the East Asia?
Yes, indeed. I think we have to share the burdens in terms of defense capabilities, and also through diplomatic way to co-manage the situation in the Indo-Pacific. So it's I think the situation shows that we are coordinating with the United States in defending the status quo, trying to avoid the Chinese authoritarian expansionism in this region. So in the Indo-Pacific, we don't have a collective security arrangement such as the NATO. So we have to strengthen our bilateral cooperation, and even to bring all bilateral arrangement into a latest strategic framework.
Right. Well, this downplaying of the situation is in lockstep, I guess, with why Taipei was fairly pleased as well that Donald Trump or the White House did not mention Taiwan in the readout of the recent phone call between Xi Jinping and Donald Trump, where Beijing tried to make the case again for the post-World War II order, basically cedes Taiwan to the rightful leader of China, and that being, after 1949, being Beijing. Obviously, with Donald Trump not mentioning Taiwan, it takes it off the front burner, but at the same time, it does not allow Donald Trump a chance to reaffirm America's commitment to Taiwan. Do you question, under the Trump administration, their commitment to the defense and support of Taiwan?
We have no doubt on the Trump administration's commitment to the regional security in the Indo-Pacific, especially the first island chain. So I think it's a different kinds of strategic arrangement.
How is it different?
By asking the U.S. allies to have this burden sharing in terms of defense budget, or to show our determination and resolve to defend ourselves. So for our side, President Lai Ching-te already adopted a series of policy to show our commitment for our self-defense strengthening. For example, the increase in defense budget and the extension of mandatory military service. Also, I think the whole society defense resilience. I think also the strengthening of asymmetrical warfare capability. So we have to try our best to show our determination and resolve. In defense of Taiwan's democracy.
What are you communicating to Tokyo? Do you want them to back down, to cool tensions, or stand ground?
I think it's in everyone's interest to stabilize the current situation, because once Xi Jinping mobilize its society through nationalist sentiment, it's also not in Xi's interest, because the economic downturn and also the high the rising unemployment rate, and also the trade conflict with the United States. So I think it's not in everyone's interest to have the China-Japan disputes on the issues related to Taiwan to escalate.
So by not provoking Beijing, you feel, this is the way I'm reading it, you feel that this could die down sooner?
Yes, I think so.
How long?
Because I think Japan has already shown its willingness, because it's in the parliament, it's in the QA session. So there are some backgrounds. So it's not just a different policy change from the Japanese side, but for Beijing side, maybe take maybe a year to stabilize the situation. But for saving Xi Jinping's face, he has to do something to show his domination in the disputes.
So obviously there's a lot of diplomacy going on behind the scenes, which is quite limited for a region like Taiwan, essentially, because it only has diplomatic relations with 12 nations, 7 of which are in Central and South America. So they are leaning more on like-minded nations like Japan, South Korea, the United States, and also the European Union, in addition to the Philippines and India. And in fact, Minister Lin has been to Europe 3 times in the last several months. The Vice President, Xiaobi Kim, is in Europe. She just gave a speech to the European government for the first time for a Taiwan Vice President to give a speech there since 2002. So there are other diplomatic efforts underway to kind of get counsel on how to de-escalate and defuse this situation between China and Japan.
And a rare conversation there with Taiwan's Foreign Minister. Steve, thank you so much for that. Stephen Angle, our Chief North Asia Correspondent in Taipei. Let's get reaction from Beijing and bring in Victor Gao, Vice President at the Center for China and Globalization. Victor, we had Minister Lin saying that it'll take at least a year for relations between China and Japan to normalize, to ease. What's your take on that? Is he being too optimistic or not?
Thank you very much. What Prime Minister Takaichi of Japan did recently is very profound because she was the first sitting Prime Minister of Japan to openly threaten war against another country, and in this case, threaten war against China. Now, what she did was tantamount to turn the table on the terms of the unconditional surrender of Japan that Japan entered into with China and other allied countries in 1945. That will be tantamount to overturn the table on the international order established in 1945. And China will never allow the remilitarization or the new fascism of Japan. China will never allow Japan to constitute another threat to China. Why? Because the Japanese imperialists caused 35 million people to be lost in the 14 years war against China between 1931 and 1945. And what Prime Minister Takaichi did is also tantamount to triggering the enemy state clause in the United Nations Charter. So you are talking about peace or war as a result of what Prime Minister Takaichi did. And for those Taiwanese separatists, yes.
But Victor, to be sure, Prime Minister Takaichi did not threaten war. What she did say was if Taiwan were attacked, Japan would take action. That was what she said. She did not threaten war.
If you listen very carefully, she was talking about removing the 3 restrictions on the nuclear weapons policy of Japan. That means there are forces in Japan who want to develop and deploy or eventually use nuclear warheads. Against whom? You need to think very carefully about it. There were people talking about sinking the Fujian aircraft carrier. There was a leader of the Naval Self-Defense Force of Japan talking about sinking all the surface naval ships of China within, let's say, 24 hours or 48 hours. And this is happening in a country which unconditionally surrendered in 1945, which undertook never to constitute a threat to a country like China. So let's be honest. We are faced with a moment of truth. We are faced with a moment where Japan needs to be stopped in this dangerous march into militarism or new Japanese.
It is quite apparent right now, Victor, that both sides want to stabilize the relationship. The question is, how do we get there? What might Japan do to stabilize its relationship with China right now?
Japan needs to cut off any relation with the Japanese fascism. When Japan unconditionally surrendered in 1945, Japan needs to openly, publicly acknowledge that Japan will honor the commitments it went into when it unconditionally surrendered to China and other allied countries. And Japan needs to undertake solemnly that it will never develop weapons of mass destruction, especially nuclear weapons. Because let me tell your audience, the moment Japan develops the nuclear weapon, that will be the moment of annihilation of Japan as a state. Because China and other peace-loving countries will never allow Japan to develop weapons of mass destruction. That means for Prime Minister Takaichi to threaten war against China is moving in the dangerous direction of destroying peace in this part of the world. And if they want to implicate the United States in this threatened war against China, let me tell all the Americans, remember Pearl Harbor. Don't allow Japan to betray its commitments it entered into when it unconditionally surrendered to China and the United States and other allied countries. We are facing with the moment of truth, and China will never relent any effort in stopping Japan in that move in the wrong direction of neo-Japanese fascism and turning the table on the verdict of the unconditional surrender of Japan to China in 1945.
I would just like to put it out there that it is a matter of interpretation of what Prime Minister Takaichi said. And you have your own interpretation, and some might say that there was no threat of war as far as she is concerned. I just want to take the conversation forward. In terms of the role of the U.S., how does China view the role of the U.S. in terms of the cross-strait relations between the two sides?
President Trump is very clear. President Trump does not want to be involved in overseas war, especially an extended war. And I think President Trump fully is aware that if war breaks out between China and the United States, it will be the beginning of the Third World War. And neither country can survive this Third World War unscathed. Therefore, if I have a piece of advice for President Trump, it will be, President Trump, embrace peace between China and the United States. Let's really believe in the inevitability of peace between China and the United States. And neither China nor the United States should be swayed one way or another into war against each other. And we should be opposed to any country or any region which want to bring either China or the United States into a state of war against each other, because war between China and the United States will be Armageddon for mankind. Therefore, I want to call on people like Prime Minister Takaichi, stop the dangerous move of trying to bring the United States into a war with China. And I want to tell every Taiwanese separatists, stop betraying your own country. And you can never achieve the independence or separatism of Taiwan. The Chinese reunification is the megatrend of our time.
Right.
And you will all live to see the reunification of China.
We saw President Trump make a phone call to President Xi Jinping before that phone call to Prime Minister Takaichi. How would you describe the relationship between President Trump and President Xi Jinping currently?
I think Wall Street Journal report tells the better truth. Between China and the United States, despite of all our differences, we have very good channels of communication. President Trump and Chinese President Xi Jinping, we have very reliable, very trustworthy channels of communication. And China and the United States, being the two largest economies in the world, two countries with tremendous amount of responsibility for world peace, can always decide that they need to embrace peace, and they should not be tempted into war, either directly or by a third party, especially by Prime Minister Takaichi. Therefore, I have tremendous amount of trust and confidence in the quality of communication between the Chinese president and President Trump, and I don't think China and the United States will be tempted into war, and peace between China and the United States will forever preempt any country, any leader, especially Prime Minister Takaichi, from trying to use the United States for its own devious purpose of turning the table on the verdict of the Japanese unconditional surrender in 1945.
Victor, thank you for your perspective today. Victor Gao, Vice President at Center for China and Globalization. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Hong Kong Chief Executive John Lee has announced that a judge will lead what he says will be an independent inquiry into the fire at a housing complex last week that killed at least 151 people.
I directed the effort to make a comprehensive and thorough investigation. Next step, in order to prevent the same kind of tragedy from happening, I think we need reform. I thought about partners we need to take forward the reform, and the partners I meet would definitely be legislative councillors. They have all experienced the fight, they understand the pain, they will work with the government to implement the reform together.
Let's go to Hong Kong and our China correspondent Min Lo. Min, what are some of the key takeaways from John Lee's press briefing this morning?
I think definitely the fact that he is starting an independent inquiry to look into the cause of this fire and why it spread so rapidly. That is one important takeaway, because that was one of the 4 demands that people have been asking for in an online petition. And he also talked about the need for systematic reform, the need to look into whether or not there were transfer of benefits, conflicts of interest, bid rigging or corruption that is going on. He said that the government needs to look into whether the list of compliance safety materials are comprehensive enough, whether the inspections are effective, whether penalties are strong enough to deter wrongdoing. So a lot of changes that he says needs to happen, and that's why he says Hong Kong needs to move forward. He says that the government will not be delaying the upcoming legislative councillor election that is taking place this Sunday, and he said he needs the partnership of these legislative councillors to make the necessary changes to the rules. He also provided an update to the number of arrests, and so far the government has arrested 13 people, accusing them of manslaughter. These are consultants, subcontractors related to the scaffolding project. He also said that the Anti-Corruption Bureau has arrested 12 people on corruption-related charges.
John Lee was asked whether he should step down. What did he say?
Yes, and this is really, showing you how political and sensitive this situation is. And the upcoming legislative councillor election is obviously going to be a test for his administration, right? Although it's not necessarily going to show up in the results, because we are now under this electoral system imposed by Beijing under the so-called patriots-only system. John Lee was asked if he deserved to stay on as chief executive, but he did not really answer the question. He was also asked to confirm whether or not the National Security Police had arrested 3 people, including a district councillor, a volunteer, and someone who started the petition. Again, he didn't answer the question, but he was very strongly convicted in what he had to say about national security. Have a listen.
I emphasize, I will not tolerate any crimes, particular crimes that exploit the tragedy that we are facing now. Societies, everybody in Hong Kong are uniting to help those who suffer to continue their living and face up to the future. Anybody who dares to sabotage this attempt, this commitment of society, we will do anything we can to ensure that justice will be done.
And you can hear from the tone of his voice, he was extremely convicted about that, warning against anyone trying to exploit this tragedy. And he actually switched to English when he said those lines instead of speaking in Cantonese, really marking how important this message is, not just to the domestic, but any international audience as well, Has.
Min Lo, thank you so much for that. And before we go, here's a look at our guests for tomorrow. Bombay Stock Exchange CEO Sundaram Ramamurthy will be joining us exclusively to discuss India's red-hot IPO market and the outlook for stocks heading into 2026. Plus, SACE chair and former Italian foreign minister will be sharing his insights on investment and trade opportunities across Asia. And that is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.